I traded with a risk to reward as little as 1:0.5 up to as far as 1:10 across different assets, across gold, across Forex, across futures contracts, across commodities, to let you guys know which risk to reward is actually profitable in Forex trading. And if you are starting as a complete beginner, which risk to reward should you focus on if you want to be able to pass your pro-firm challenges or make profit on your private account? On this video, I'm going to be going through all the backtesting data. I traded almost about 1 year of data to show you guys this is not luck. This is using data. Whatsoever result I'm going to be recommending to you guys today is using data. So we're going to go through 1 year of backtesting or 1 year of data which I have traded from a risk to reward of 1:0.5 to a risk to reward of 1:10. We're also going to even go a further step by using an automated tool to show you guys how you can be able to simulate to see which risk to reward is actually profitable in 2026 and beyond. Coming up right now. What's up, guys, and welcome back to my channel. If you're watching me for the first time, my name is Godlove. On this channel, I create videos on Forex, futures, and tips to help you stay profitable on a consistent basis. I currently have the biggest YouTube channel in Africa in the niche of Forex, futures, and finance. So if you're watching and you haven't subscribed, smash that subscribe button below to subscribe to the channel so that anytime I come up with awesome content like this, you will be the first to know. So yes, the question is, which risk to reward should you stick to as a Forex trader who wants to get his first payout or his first withdrawal? I'm not only just going to give you guys the answer. I'm going to be doing the back testing, or I'm going to show you guys the results which I have gotten from almost about 1 year of back testing, so that you guys will be able to see, not only know, but also see which risk to reward is the most profitable, the pros and the cons on each risk to reward, and how you can go about this. Let's just start on a risk to reward of 1:0.5. All right, 1:0.5. So let's just start in general. What is risk to reward, right? What is risk to reward when it comes to trading? So risk to reward is just a concept of risk and money management in trading, which states that the reward you get for every risk you put in the market, meaning what you get out of the market for every input into the market. So I like using examples like this, right? So I have a total of 3 pens right here. Assuming these are the same colors of pens, the same height, everything, I like using these 3 pens to give you guys a typical example of risk to reward. If I'm going for a risk to reward of 1:1, it means it can be in terms of percentages. It means I'm risking 1% on that trade, and if it goes my way, I'll make 1%. If the trade doesn't go my way, I'll lose 1%, but if it goes my way, I will make 1%. That's a risk to reward of 1:1. If I'm talking about a risk to reward of 1:0.5, it means if I'm risking 1% on that particular trade, if the trade doesn't go my way, I'm going to lose 1%. But if it goes my way, I'm going to make 0.5%. I'm going to make 0.5%. Yes, there are people, you can see even the trade on my screen was actually a risk to reward of 1:0.5. That trades like this are taken for many reasons, which I'm going to explain to you guys. But that's just what risk to reward stands for. If I'm using, say, bananas, right? If I was a monkey and I'm trading using bananas, I'll say, okay, a risk to reward of 1:1 means I'm risking 1 banana to go for 1 banana. Means if the trade goes my way, I'll make 1 banana. If it doesn't go my way, I'll lose 1 banana. Risk to reward of 1:2, self-explanatory. If I'm using bananas again, it means for every trade that I place, I'm going to risk 1 banana. If it goes my way, I'll make 2 bananas. Risk to reward of 1:2. But typical in trading, we talk in terms of percentages. So I'm going to be talking about someone who is having a 100K account. It can be 100K pro-firm account. Nowadays, you guys can easily, very easily get a 100K pro-firm account. If you're looking for a pro-firm to use that you can easily trade with capital as much as even $1 million, check the link on my video description to use my recommended prop firm. So I'm going to assume you have a $100,000 prop firm account. And if you are talking about a risk to reward of 1:1, it means for every trade you place, you're going to be risking 1% of your account. And if it goes your way, you make 1% of your account. If it doesn't go your way, you lose 1% of your account. Risk to reward of 1:5 means you are risking 1% on your trade. If it goes your way, you make 5% of your account. And if it doesn't go your way, you lose 1% of your account. The risk to reward of 1:10, self-explanatory, means you are risking 1% of your account per trade. And if it goes your way, you make 10% of your account in that same trade, if that trade actually hits your TP. Remember, we are talking about a situation where you are risking 1%. If you are risking 2% of your account per trade per se, it means if you are talking about a risk to reward of 1:1, it means your TP has to also be 2% of your account. If you are risking 2% per trade, risk to reward of 1:2 means your TP will have to be now 2 times your risk, which is going to be 2 times 2, which is 4. Risk to reward of 1:2. You are risking 2% to go for 4% at that point in time. So that's the concept of risk to reward. I just wanted to take that out of the way so that we can be able to understand. And whether you like it or not, this is the core of risk management when it comes to trading. And risk management is the key. Whether you like, take any random strategy on the internet, if you can understand this concept of risk to reward, you're going to make money, you're going to secure your first payout. Risk to reward of 1:5, I just explained to you guys. Of 1:0.5, I have already explained to you guys, and this is it right here. You can see this was a trade we took yesterday. This is a 5-minute time frame, and you can use this concept on either Forex or futures. It doesn't matter. So I was actually trading this on futures yesterday. On Forex, it would have been the same thing. So I took this trade. The market was in a downtrend, pulled back to my Phipps level, and then closed bearish. At the close of this bearish candle, I took this trade. But at this point in time, I was already, I'm going to put a screenshot of the message I got from Top Step right here. I was almost passing my challenge already. So the reason I needed just 0.5% of what I was risking was because I just needed $500 to pass this particular challenge, which I have already passed. I'm almost about $5,000 in profit today across all the accounts I'm trading on Top Step. But yes, you can see that was it very, very clearly. I was risking $1,000 right here, and my TP was just $500. So if I can click here, you can see that was my stop loss right here. Right here is my stop loss, so that you guys don't get confused. This is my stop loss right here, and my TP is right here, and my entry was right here. So you can see. So someone will say, oh bro, look at where your entry. No, there are reasons for everything in the Forex market. And I just explained to you guys the reason why I was trading with the risk to reward of 1:0.5 on this particular trade. I'm going to go across different risks to reward, and at the end of the day, I'm going to give you guys the most recommended one for beginners. The most recommended one that there's a high probability you can be able to make money trading either the Forex or the futures market. So this is a typical example of a risk to reward of 1:0.5. Voila, let's go to the most common, which is a risk to reward of 1:2. All right, this one is a risk to reward of 1:2. Let's see. Let's see. I don't think we have a risk to reward of 1:1 yet. So, yes, this one is a risk to reward of 1:2. I took a trade on, which one was it yesterday? That trade was, I want to show you guys a risk to reward of 1:1, all right? 1:1, so I had one yesterday on, yes, it was on US 500. US 500, and it was also US 500 and Euro USD. So any of them, yes. Euro USD is here. And I remember that trade was at the open of, almost at the open of the London session yesterday. And it was at the cross of the market. I shared this trade on my Instagram yesterday. By the cross of this candle right here, we entered this trade right here. My stop loss was somewhere just below this particular candle. And I was going for a risk to reward of 1:1. Voila, this is a risk to reward of 1:1 right here. So you just keep pulling this, and you can see this is my entry right here, this is my stop loss right here, and this is my take profit right here. So risk to reward, there's this tool you're going to use on TradingView, which is going to show you. You don't need to be worrying up and down. Just come and click here. There's the tool right here. It's called, just go under, what's it, under forecasting, and then you will see long position. The long position is going to show you your risk to reward if you are buying. Short position is going to show you your risk to reward if you are selling. So this was a trade I took yesterday on Euro USD with a risk to reward of 1:1. My stop loss is there, my take profit is there. Risk to reward of 1:2, this is it right here. As I mentioned earlier, this is a typical risk to reward. At the same time, I also took this one on gold. This was almost at the same time. Stop loss was here, take profit was there. You can see my risk to reward there was 1:2. Let's go to risk to reward of 1:3. Voila, you can see the green section starts getting bigger, right? Because the smaller the risk and the bigger the reward, the bigger the green bar. This green section represents your risk. So this was my entry. My stop loss was just here, but look at where my take profit was. It was right up here. So that's a risk to reward of 1:3. And then the last trade I took also yesterday was a risk to. That's why I was able to pass their challenge on Top Step yesterday. And if I go on Top Step, most of the futures that I trade on Top Steps, you have crude oil. This is crude oil right here. You have gold. You have 6E, which is Euro USD. You can still trade Euro USD on future. It's called 6E, which is Euro FX. Then I also trade NASDAQ, which is NCure, and GC, which is silver. So these are still the same top assets right here. So like I said, this same thing is going to apply in Forex without any issue. So you can see this one. This was my entry on what? On crude oil. Take profit was right up here because this was still during the Asian session. I was going to sleep. I put my stop loss on the trade, put it on a risk to reward of 1:4, and just went to sleep. And luckily, before I woke up from sleep, it has hit my take profit right up here. So this was a typical risk to reward of what? 1:4. I'm going to stop at this particular point in time because anything above 1:4, I don't recommend. You can even go with 1:10, all right? 1:10, it means if I was still going up, this trade would have even hit 1:6. You see, this was 1:6 right there. It means this trade would have still hit 1:6 right there. Look, it means this trade would have still hit 1:6 right there. But I'll recommend, please just stop on 1:4. All right, stop on 1:4, and let's continue. I'm going to tell you guys the best risk to reward to use. So that's just risk to reward in essence, and you can see across from a risk to reward of 0.1:0.5 to a risk to reward of 1:1 up to a risk to reward of 1:6. Let's use now some simulated data, and I'll also show you guys what I was able to pick and why I was able to conclude on the risk to reward I'm going to be recommending for you guys today. So here you can see this is actually a Forex bot, which this is Petrex Pro right here. This is Petrex Pro, which has won 5 years in a row as the most viral and the most profitable Forex robot. This robot, you can use it on your private account or your prop firm account. So the reason why I'm using this robot to simulate this is because the robot is going to backtest years upon years of data or bigger samples of data across different risks to rewards to show us the results in no time so that we can be able to see which one performs very well. You can see here we have our stop loss, we have our take profit. Don't worry about all these other parameters. The robot is having more than 80 parameters, so don't worry yourself about that. If I go on my input, I was just doing what is called optimization. So on my input, I just did optimization on gold. And for the past 30 days or for the past 1.5 months, that's from the 1st of March to the 6th to today, 1st of March to the 6th of April. And this was on a $100,000 account. Assuming you were trading on a $100,000 private account, these were the results you would have gotten with Petrex Pro. You can see, look, $268,000, not the equity, the profit you would have made if you were using these same settings that are here. You can see these are all the results based on different parameters. This is called optimization. I'm not going to be going into that. What I'm just going to be focusing on today is the risk to reward on every trade. Let's start with a risk to reward of 1:0.5. This is 4,500 and 3,000. 4,500 and 3,000. Let's see if we, okay, this is still 4,500 and 3,000. Yes, I think we're going to use that one. We're going to use that one, 4,500 and 3,000. That's a risk to reward of 1:0.5, all right? Because, you know, 3,000 is 0.5 if you are using a risk to reward. So let's run this one. If I just double click on it, we go on the equity curve, you guys are going to actually see. Remember, this one made a profit of $66,000 in 30 days. All of these results was in 30 days. And the lot size we're using on this trade was just 0.5. Look at this. Look at the parameter settings. The lot size we're using on all this trade was 0.25. 0.25 lot size. This is it right here, 0.25. So let's go back to our graph and see. This is what would have happened with a risk to reward of 1:0.5. Now, before we even see the result, one thing you have to bear in mind, if you are going for a risk to reward of 1:0.5, what you're going to be able to have is you're going to have a very irregular equity curve, a very irregular equity curve where you will be able to see a smooth equity curve like this, and one drop, boom, you see it's going to drop against you because your risk is way too bigger than your reward. All right, I don't recommend this for any reason. I don't recommend this for any reason unless you're just looking for a small profit to pass a profit account like what I did yesterday. Even though we still made almost about, let's go on back test, we still make $66,000 on this particular trade. But look at the drawdown. The drawdown was almost about 35%. That's too huge. Though the profit factor was 1 point, any profit factor above 1 is still good. But when I just see my recovery factor, 1 point this, it's still very low, and my drawdown is very high. Though we make money at the end of the day, but we open too many trades, and the win rate, where is the win rate? Let me show you guys. The win rate needs to be above 80% for you to make money. Let's go on win rate, short trade, profit trade. Can you see this? Profit trade. So we had a win rate of 61%. Anything below 60, yes, a win rate of 60 and above percent. Any win rate below 60%, you're going to lose with this particular, with a risk to reward of 1:0.5. The win rate must be above 60% before you can even make money with a win rate of what? With a win rate of 1:0.5. I mean, all right. But now let's go to a risk to reward of 1:1. 1:1 with just a win rate of 50%, you still be making money. 1:1 with a win rate of 50%. Let's just say you took a total of 10 trades that particular day, right? And within those 10 trades, remember 1:1 means you're risking 1% to go for 1%. 50% win rate means you had 50% that were losers, 50% that were winners. So 50% that were losers, you lost 5% of your account. 50% that were winners, you made 5% of your account. So at the end of the day, it was a break-even day. So with a risk to reward of 1:1, you just need a strategy that is 50%, that has a 50% accuracy and above. Don't worry, I'm even going to tell you guys the sweet spot risk to reward where you can even make money even if your strategy is having less than a 50% win rate. So let's look for 1:1. This is a risk to reward of 1:1, and we still made $27,000 with this combination. This is for the past 30 days, remember, and using a lot size of 0.25 on a 100K profit account. So you can already have an idea of how effective Paytrex Pro is, of why it has won 4 years in a row as the most profitable Forex robot. So you can see this is our board opening all the trades here. I'm just going to zoom it up so that we can be able to see the equity curve very clearly. The chart shows up there. You can even still put it on visualization if you want to be seeing it opening in real life. Okay, so these are our results right here. Risk to reward of 1:1, and just seeing how the equity dropped from year to year, I wouldn't even recommend 1:1. Though we still made money, but I wouldn't recommend a risk to reward of 1:1 just because of this equity drop. The drawdown is so scary and it's too big for my liking. So that's why I wouldn't personally recommend that particular one. Okay, it's going to be finishing very soon. The good thing is we are still above 100K right here. You can see we are on 126,000 right here. So let's just wait. Okay, it's finished. We made a total of $27,000. Win rate, that's profit trade. Profit trade, the win rate was 51%. Can you see what I was talking about? So with a risk to reward of 1:1, you just need a strategy that has a win rate of 50% and above. And you can see what was our win rate here. Our win rate here was 51%. Profit factor is still above 1, which is good. But scary. Look at the drawdown here is 58%. That is too much for me. So we're going to also discard that one and go for a risk to reward of 1:2, which is what I'm going to recommend. This is the sweet spot for every trader, whether you're a beginner, an intermediate trader, or you're an advanced trader. Go for a risk to reward of 1:2 and you will never get it wrong. With this one, you just need a strategy that has a win rate of 40% and above, just 40% win rate, and you'll still be making money. So let's look for a risk to reward of 1:1. Stop loss here is 3,000. I'm looking for the one, the TP is going to be double the stop loss. So good, voila, right here. Our stop loss is 200 pips and our TP is 400 pips. And you can see we made a total of $265,000 look at the settings, from the 1st of March to the 6th of April. That's in about 30 days or in less than 20 days of trading. We made a total of what? We made a total of $265,000. Let's double click on it and actually see our results in real time. Look at that. Can you see that? It stays above 100,000. Stays above 100,000. So let's go. Let's run to the end of the chart so that we can actually see what happened. Remember, our stop loss here was 200 pips and our TP was 400 pips. So let's run to the end to actually see what happened. You can see the date here. We're still on the 10. This was still the 10 of the 10 or 11 of March. So we're just going to fast forward to the end of to the 6th of April so that we can be able to see our results. Perfect. So we just finished our back testing and you can see we're standing here on about $370,000 from a $100,000 account in less than in 30 days. If we go on back testing, we made a total of $265,000. Those are total number of trades we took. Remember, this was being done by the bot, so yes, we can take those number of trades. Look at now our win rate. Oh God. The same thing I was just talking about. Remember, I said any strategy with a win rate or with a risk to reward of 1:2, you just need to have a 40% win rate. Look, profitable trades, we had a win rate of 44%, not even up to 50%. Not even up to a 50% win rate, but we still made a total of what? We still made a total of $265,000 from a $100,000 deposit. Meaning if this was on a private account, you'll be standing on a profit of $265,000 using these same parameter inputs, using this same input right here. That's why it's good to optimize sometimes, because optimization is going to pair thousands upon thousands of parameters to be able to give you the correct parameter that's going to give you money. And that's why when I come here, I even use agents. I even pay agents. I don't spend less than $3,000 every month on MQ.5 on renting agents so that I can be able to have many cores on my computer to do as many optimization as possible. Takeaway here is the win rate. 44%, less than even 50%, but that was still the highest month we made, or the highest parameter combination that gave us the highest amount of money, even with a win rate of what? Of less than 50%. Just look at this. This is look at the profit factor above 1 point. This is the highest profit factor so far, the highest 1.23. And we're using what? We're using a risk to reward of 1:2. Let's now, remember I said 1:2 is the best. Let's go to 1:3. The more you go, you start seeing what we call diminishing effect, where now instead of your equity curve being as smooth as what we have here, look at this equity curve. This is a very smooth equity curve. Instead of your equity curve being as smooth as what we have, the higher the risk to reward you go, the more uneven and irregular your equity curve is going to be. All right, because you're going to stay forever before your TP is hit. Just say you are trading with the risk to reward of 1:4. It's going to take forever for your TP to be hit, and you're going to have many stop losses than TPs. All right, so that's why I just recommend you end on 1:2. Let me show you guys an example of 1:3. This is 1:3.5. This is a risk to reward of 1:3.5. Let's just run. Although we still made a profit of $131,000 a year, but I'm going to show you guys the equity curve is going to be very, very irregular. Look at this. I don't personally like this. There was even a point in time we dropped right down to $93,000 before bouncing back again. I don't like that. Look at this drop from here. We went up to $131,000 and then dropped right down to $80,000. I don't like that even a bit. So that's why I don't like anything above 1:2 risk to reward. I'm not going to wait for it to go to the end because you guys have already seen we're going to make almost about 120 $131,000. If you can see here, that's $131,000. But the higher the risk to reward, the more diminishing effect it's going to have on your result. So what's the bottom line here? After seeing all this data, if you want to secure your first payout in 2026 and beyond in trading, whether in Forex or in futures, stick to a risk to reward of 1:2. Pick any of my strategy. You might be asking, okay, which strategy is going to... No, pick any of my strategies on this particular channel. Pick out the GU MVRO strategy, which has become viral. Traders are making money like crazy using that strategy. Pick the GU MVRO strategy or the GU ORB strategy. The bottom line there, the key point there is make sure you are using a risk to reward of 1:2. Meaning if you are risking 1% on that particular trade, make sure you are targeting 2%. If you are risking $50, make sure you are targeting $100. If you are risking $500, make sure you are going for $1,000. With that, even if you have a win rate of 40%, you're going to end up still making money. Let's just take an example. Someone like Johnny O Nkuchuku FX, who took a total of 30 trades that day, right? Or total of 10 trades that day. And he was using the GU MVRO strategy. Out of those 10 trades, he had just a 40% win rate, meaning just 40% of his trades were winners and 60% were losers. Meaning 40%, 4 trades out of 10 were winners. And remember, he was going for a risk to reward of 1:2. So those 4 trades that were winners, he made a total of what? 8%. Because for every winner, he made 2%. But remember, 6% of his trades were losers, which was what? He was risking 1% per trade. So that's 6 times 1 minus 6. But how much did he make from the winners? 8%. What was the net for the day? Nkuchuku FX closed the day with plus 2%. Even though you saw his P&L, you went to his office and everything was red, you were like, bro, you've been trading for 10 years and all your trade in Nkuchuku was just smiling and you didn't know why he was smiling. He was just smiling because he knew very well that at the end of the day, he's still going to be making money. So risk to reward is crucial. If I can preach one concept in Golov University, which is my Forex Academy, Forex and Futures Academy, to the end of the day, it's going to be the concept of risk to reward. Concept of risk and money management. That's it, guys. So if you want to join me, if you want me to mentor you A to Z on Forex and futures trading, which most of these concepts plus strategies are still going to be taught to you, check out Golov University, which is my academy. That's going to take you A to Z. Link is on the video description. And I just showed you guys a bot that has won 4 years in a row as the most profitable viral robot, which you can use on your Profirm account or your private account, known as Forex Pro. So check out the link below to also get Forex Pro. You can even test out the 1-month license to see how it's going to make profit on your private account or your Profirm account. Also check out my free Telegram community where you can get free updates from me. Check out my recommended broker, which is the broker you guys should be using. So check out my recommended broker and my recommended Profirm on the video description. And as always, check out this video which shows you guys more about the concept of risk to reward. Also check out this video which was a GU MVRO strategy, which you can just incorporate the concept of risk to reward and you can start making money at the end of today. Click here to subscribe to the channel if you haven't done so, and I'll see you guys on these other videos. Peace.